Escalating tensions along the line of contact in East Ukraine, new political statements about an impending invasion, and threats of sanctions led to fresh market turbulence on Thursday. On Wednesday, oil prices were trading in a range between the levels of $92 and $94 per barrel. Following a rise, the quotes nosedived. Obviously, wild swings will not end until the situation stabilizes. Markets are now extremely vulnerable to any escalation of the conflict and are prone to speculative movements. As long as policymakers continue to make bold statements and the media keeps fueling fears, markets will experience jitters. The impact of fundamental news is enormous. Thus, the future of quotes is currency in the hands of politicians and media resources. Nevertheless, oil is trying to strike a balance. Brent crude oil futures are still experiencing a correction. Clearly, the asset is highly overbought and its current value should be reduced by another 10 to 15%. However, such a scenario is possible only in a period of calm. As long as the market is driven by speculators, the real price-determining factors are irrelevant and the overbought signal can be ignored. Thus, Brent crude may well hit another local high if the price consolidates above $96 per barrel. The foreign exchange market is also trading under pressure from geopolitical tensions. On Thursday, the news about shelling in eastern Ukraine immediately affected the Russian currency, while subsequent statements that the situation was under control calmed the market. Such price fluctuations directly depend on a resolution of the conflict. Obviously, the exchange rate will hardly stabilize until the parties find a diplomatic solution. Therefore, the outlook for the dollar-ruble currency pair is the same as for oil. If there are no new provocative statements by US officials, the dollar will quickly return to the mark of 75 rubles. If the conflict continues to heat up, the currency will easily overcome the level of 76 rubles per dollar and head towards 77 rubles per dollar. On Thursday, following another spike, the dollar-ruble pair returned to the level of 76.50, where speculative fervor subsided. As a result, the volume of long positions decreased and the price pulled back. As for technical levels, it would be a wise decision to focus on the level of 76.50 rubles per dollar when considering buy positions and 74.25 when going short. To confirm the signals, the price needs to stay firm behind one of these boundaries on the 4-hour chart. Simmering political tensions are pushing gold prices up. Traders continue to flee to safe haven assets, including gold. The higher the political risks are, the more investors are shifting their focus to the precious metal. Thus, the asset has already reached the level of $1,900 per ounce. As long as the situation is uncertain, the outlook for gold remains positive. Probably in this situation, gold can easily rise above the current price level. In case of reduced political concerns, the asset will most likely slide to at least $1,880 per ounce. On Thursday, gold futures approached the level of $1,900 per ounce. Thus, the asset has added more than 6% since early February. It's a fairly strong price change. This indicates high speculative interest, which may eventually lead to a technical correction when traders start locking in profits. So, while trading in a bull market, one should not forget about its cycles. And well, this was the forecast for the end of the week. Please watch our new videos and stay up to date with the latest market events. May your trading be lucrative, and see you back soon.